All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to do an update on Bitcoin and the Bitcoin miners weekend edition. It is Sunday of what in the US is a long weekend, so there's no trading of the equities tomorrow. However, Bitcoin continues to trade 24/7. So we cover Bitcoin, the Bitcoin miners, and the crypto world really a lot on this channel. If that's content that you enjoy and that you're interested in, please remember to subscribe to the channel and hit the notification bell. We're almost at 10,000 subscribers, so I really would appreciate anybody who would subscribe. Also, if everybody would smash the like button, it helps get these videos out to more people. So we're in a little bit of a spell here, and I want to take a step back and look at the big picture, because June was a bad month for Bitcoin. In my opinion, the worst month. They're calling it the second worst month, technically. I'll show you why I think it's the worst. And I think there's reasons for all this, and I'm actually quite optimistic going forward, but I don't know that we're done with the pain yet, but I think it'll be over sooner than later. And I'm still very bullish on Bitcoin in the long term. I just think we need to go through and look at what happened in June so that we understand where we are right now. Okay, so here's an article put out on CoinDesk. What traders are saying about Bitcoin's biggest monthly loss in 11 years. So Bitcoin slid almost 38% in June to record its second biggest monthly loss since its debut in 2009. So this is the second worst month we've ever had. You're going to see the worst month we've ever had was 38.6% in August of 2011. So that was 11 years ago. But honestly, almost all of the day on June 30th, we were actually worse than that. We were over 40% down on the month for most of the day on June 30th. We did close at 38%. So, you know, depending on what time zone you were in, you get different reports of how far down we were in June. And, you know, if you had gone back another 4 hours, it'd be the worst month in the history of Bitcoin. So, worst month, second worst month, same thing really. June losses came amid declining macroeconomic sentiment, fears of inflation, and systemic risks with the crypto ecosystem, such as the possible insolvency of crypto lender Celsius Network and the blowup of crypto hedge fund Three Arrows Capital. I just want to talk about some stuff that's happened in recent times that's causing some massive downward pressure. And there was one day in particular in the middle of June, we quickly gapped from about 30,000 where we had been hanging out down to 20,000 in just a few days. Then we broke under 20,000. So that is the first time we have ever broken the previous Bitcoin cycle's high, so which was about 19,800. We've been down as low as about 17,500 in the month of June. So that's an unprecedented thing right there, number one. We are now in a territory we have never been in before. I'm just going to mention a couple of things that have happened here in the last really month and a half or 2 months. I mean, I think this all really started. Terra Luna was kind of the match that lit the flame. That was a top 10 cryptocurrency, as well as a stable coin and a giant ecosystem. So that brings us to the Three Arrows situation. That is one of the largest hedge funds out there for cryptocurrency, and Voyager Digital lent them about $650 million, and it looks like they're probably not getting that back. So Three Arrow Capital, which at one point had about $12 billion under management, they just filed for bankruptcy. They're going through a liquidation. We don't even know if there's any money there at all. We'll discover that over the course of time, but right now it doesn't look good. So Voyager is the first one to kind of get caught up in this net, but all of the crypto exchanges behaved very similarly to Voyager in that they were leveraging and lending, and people's money were not secured. So this is a gigantic one-time lesson to the entire cryptocurrency universe and marketplace, and financially we've learned big lessons in the past, much bigger than this actually. So this is something that was looming over us. It had to happen. We're in the middle of unraveling it. So it is very painful. There are a few big players in the space, Binance and FTX, that seem to be wanting to put a little bit of a backstop into this situation. However, I do think it's mostly for their own gain, which is fine. They're also heavily vested in the entire crypto world staying afloat because that's where all of their money is. So those are the two biggest players in the space, and they have both been stepping in different situations. I am optimistic for the people that have their money on these exchanges that at some point, and it may take a while, at some point they're going to get some or all of their money back, but there's absolutely no guarantee of that. And at the moment, if you're a Celsius customer or a Voyage customer, your money, you do not have access to it right now, and you don't know if you ever will again. So these are major, major situations. Now, if I zoom out even bigger picture, some other things are happening. We've got the Fed raising interest rates, right? We had the biggest interest rate hike in the last 3 decades in the month of June. So that was 75 basis points, and they have signaled that they will most likely do that again in July. So massive interest rate hikes. This is an environment Bitcoin has never experienced, and I believe more importantly, quantitative tightening. They're reducing their balance sheet, and that is sucking money out of the system versus what the Fed has been doing for most of the last 20, 30 years is putting money into the system, and at a record pace over the last 2 years in particular. So cryptocurrency is not the only thing suffering from this. All of the equity markets are in a bear market. There are industries that are down 80 or 90% as a whole across the board. There's very few places to hide. We are just, days away from confirming that we're in a recession. And as a result, June was a disaster for Bitcoin. So I want to go look at the chart, and then let's talk about where we're at right now and where we might be going. And then I want to show you a schedule that I put together. It's a very basic schedule, but I think it just really shows the big picture of how different this cycle is right now and why I believe this is the worst crash we've had in Bitcoin in many different ways. And when we get to that chart, I'll show you what I mean by that. Okay, so quickly, this is Bitcoin on the 1 hour time frame. As always, there's an orange line where we closed the equity markets on Friday. So Bitcoin was at 19,366 when we closed on Friday. It's at 19,229. So, just within about $100 of where we closed. It's been trading in a very tight range here since we've closed over the weekend on fairly low volume, so not very much going on over this long weekend, and that was, I think, to be expected. But what's most important is you'll see this line here at about 19,500. This was our 4.5-year line of support representing the high from the previous Bitcoin bull run. So we have taken that out, and we are now below that for several days. So we're confirmed below that. It hasn't really gotten too far below that, but it's been enough days in a row, 4-hour candles, daily candles, that we clearly have broken that support, and so we'll see where we go. So if we look at Bitcoin on the 1-day time frame, you'll see 4 days ago we were right at this line. That was the end of the month, and you can see this daily candle dipped very low. It ended at the very top. That's what made this the second worst month instead of the worst month. For most of this day, June was the worst month in the history of Bitcoin. Then the following day, on July 1st, we closed below $20,000 on a daily candle, and now we are 2 more daily candles in a row below $20,000. So we're trading very sideways. We had a period like this right here, as you can see, where there was a solid month of just very sideways activity. We seem to be potentially in a similar situation here. This period of time is a little more bearish than this was, so I do think there's a potential we'll go test some lows. However, I am not expecting the catastrophic lows. There's an awful lot of people that are waiting for this 85% pullback in Bitcoin, and I'm going to show you why I don't think that's going to happen. Now, it might, right? Who knows? But this cycle is so very different that 85% doesn't really apply. It would be, in my opinion, if it does go down 85%, it's almost arbitrary because this cycle's been so drastically different in every other way. There's no reason that one metrics would stay the same. Here's a few reasons I think we're already in the middle of the biggest bear market that Bitcoin has ever experienced. It has done a series of firsts, and not in a good way. So the first thing I want to show you is this is the 200-day moving average. We have only ever been below this line 2 other times in the history of Bitcoin. Both of those times we did crash 30% below the line, only to return back above the 200-week moving average literally within days. So it has now been weeks, and you can see we've had over the last week, we're getting further and further away from the 200-week moving average. So this has never happened before in the history of Bitcoin. This is the most bearish situation in relation to the 200-week moving average that we've ever seen, and this time we seem to be drifting lower. This is now 2 weeks in a row where we have weekly candles that open and close below the 200-week moving average. So again, that has never happened in the history of Bitcoin. But what I want to show you is on the weekly RSI. I have mentioned this before. This is now the 3rd week in a row. We are currently at 25.7 on the weekly RSI. That is the all-time low in the history of Bitcoin. So this is another indicator that we are in a severe bear market for Bitcoin, worse than the previous bear markets. In addition to that, this is the monthly RSI for Bitcoin. So right now we're at 41 on the monthly RSI for Bitcoin. That also is the worst in the history of Bitcoin. So you can see this is a series of worsts in Bitcoin. This is a series of things that have never happened before. So in a lot of ways, this bear market, although we have not been down 85%, and I don't think we're going down 85%. Okay, this is a chart of a series of highs and lows that Bitcoin has experienced over the course of its lifetime, and most of these correspond with halvings. So there are other highs and lows that were inside of these. So these aren't the only bear markets Bitcoin has ever had, but these were the big swings. So what I just wanted to show you is everybody's looking for this 85% pullback, and you can see that during the last two halvings, we got very close to that. This was closer to 87. This was about 84, but call it 85% if you will. Bitcoin in November of 2013 was almost 39x what it was from the previous cycle's high. There was a 39x in what basically was a 2-year period. And then you can see in the next cycle, from the high to the high, there was almost a 16x. So in both of these instances, we pulled back 85%. If we count 69,000 as the peak of this cycle, which was in November, then we only ever 3.5x'd versus a 16 and a 39. So this is drastically less than the two previous cycles. So because we never went up in this manner, it does not make sense that we would pull back 85% because this cycle was much, much worse than the other ones. So had we even had a 10x, we would already be pulled back way more than 85%. But because we hardly went up, I don't think we're going to have a full 85% pullback. We're already at 75% from June 18th, which was the low at 17,585. Now, I'm not calling a low. We may retest that low. I've got a couple other numbers that we may hit. And if we do have an 85% pullback, that would be $10,350. But I'm not expecting that because you can see the other way to look at this is if you invested your money at the peak in June of 2011, at the low of the next cycle in January of 2015, so that is from a high to a low, you would still have been up 5x on your money. So your $100 would be $520, even if you had rode out the full 87% pullback off of these highs. In the next cycle, the same thing. You would have had a 2.5x on your money. So your $100 would have been worth $250 from the high to the low. In this cycle right now, as it stands, if this ends up being the low, so it's either this or worse than this, you're actually, if you invested money in January of 2017, that's 5.5 years ago, you are actually down in Bitcoin right now, had you bought money at the top. So that is the first time this has ever happened. You can see, even at its worst, even after 85% pullbacks, people were still up 2 or 3 or 4 or 5 times on their money. Right now, people are down. So this is a much more drastic move to the downside when you look at it that way. So those are the reasons that I think we're finding a bottom right now. I don't know where the actual bottom is, and I'm going to talk more about this. I rushed through this a little bit. There's a lot more we can analyze just on this chart. I will be doing Bitcoin updates and trying to get you guys this information over the course of the next week because I think there's a lot of valuable information and we got to try to figure out where we're going. So I hope everybody's enjoying your weekend, and if you're in the US, hope you're enjoying the long weekend. Thanks so much for watching. If you made it this far, remember to subscribe and smash the like button, and we will see you in the next video.